What's up, MTG Tribe? Rick Pedicelli here with a critical market update you need to see right now. Remember how the broad market averages were showing strength and breaking out? Well, that breakout just failed across multiple indices, leading to some important shifts in market analysis and portfolio positioning. Stay tuned as we break down exactly what this means for your trading, including specific levels you need to watch. Plus, stick around to the end for a crucial bonus tip where we talk about what to expect after a false breakout. So let's dive right into these charts. First up is the daily chart of the S&P 500 ETF SPY, and we have the false breakout here above the range high. This is actually the first decent false breakout. This was more of just a quick pop above the last two times, but last week we had several days with the price closing above the prior high. So it's a bull trap, and after last Friday's plunge, investors are scrambling to adjust to the price action. And as you can see, we've had several attempts here in the SPY with that have led to ugly rejections. But the one thing the daily chart had going for it was that the price action over here was tightening up versus December during that sell-off, a much deeper sell-off that broke down below the 50-day MA, which is this blue line here. So this is just the 8 EMA, 21 EMA, and the 50-day MA, and then the 200-day MA. So with the prior breakdowns, there was a gap down and then a quick recovery back above. Gap down and quick recovery back above. We had not a gap down, but an ugly sell-off on Friday. Can the price action maybe bottom out within the next day or two and recover back above the 21 EMA and attempt to push higher? Or do we see a break of the 50 MA and the price action begin to live below the 50 MA? That would be a bearish sign. So that's what we're looking for is, can the price action hold the 50 and recover quickly, or are we looking at further selling below the 50 MA? And if there is further selling below the 50, that could open the door for a retest of the range low down here. Because although in the short term we've had a false breakout, and if there's further selling, it could lead to a test of the prior low. We're still in one big chop fest on the daily chart with the 200-day MA pushing higher to provide support if there is further selling. So the 50 MA is a key level to watch during the next few days. On to the NASDAQ 100. QQQ failed the first breakout attempt of the range high on a big pickup in volume on Friday. It still is above the 50-day MA, but it's pretty ugly action here where we have 1, 2, 3, 4, 5 days worth of lows taken out in one session. We still do have this moving average here that is potentially in play. We'll set it here for now with the 50 MA right here as support. So again, sort of like the S&P 500, we have a nasty rejection and sell-off with support at the 50 MA becoming the big level to watch right now. So again, can the price action hold above the 50 MA on a closing basis, or if there's a close below the 50 MA, can the price action recover back above within the next day or two? That's what we'll be looking for. And if the QQQ is able to bounce from here, we'll have to see how it reacts to the first test of the declining 8 EMA, and if it can retake the 8 or even the 20 here, depending on when there is a bounce, if there is a bounce. So just a few things to watch for if the price action is able to reclaim the 50. And like the chart of the S&P 500, if the QQQ is unable to hold the 50, we could see a possible test undercut of the 510 area. That would be the next level of support. And then the 500 level for the base low, which would have the rising 200-day MA just below. I'm not saying the price action is going to that level, but it's possible if the price loses the 50 MA and fails to find support at that level within the next few days. So we have the S&P 500 false breakout, the NASDAQ 100 big cap tech false breakout. Now we're going to take a look at the mid cap growth ETF, which is IWP. So here's the daily of IWP. The daily chart is just a little bit different than the S&P 500 and NASDAQ 100 in that it's sliced through the 50-day MA and the prior low. And we like to monitor IWP because it's a good proxy for growth. How are growth stocks acting? Are they leading or lagging? And this used to be something we used to use IWM for back in the day, a long time ago. But it seems that IWM is no longer the proxy for growth that it used to be. So we've replaced it with IWP, which is pretty much has been acting like we expect it to when growth is on and when growth is off. So that's why we keep a close watch on it. So with IWP already below the 50 MA, slicing through the 50, within the next few days, it's got to reclaim the 50, or we could be headed right back down to the base low. And you can see there was just a big down day, and it was also reflected in growth stocks. Just a lot of nasty declines off the highs. And there's another growth stock ETF, FFTY, the IBD 50 ETF, which was showing relative strength prior to the last few days with a clear breakout above the base high and just a nasty breakdown. And last Friday's action was just a brutal sell-off all day in growth. So with the close at the lows, it's possible we could see a test of the 200 MA and base low around within the next few days. So back to IWP. With this kind of selling, as we saw last Friday, the daily charts are going to look pretty ugly on most leadership stocks in the short term. So we're going to need some time to repair those charts. Now, a few charts may have held up better than others and might be in play within the next day or two. But for the most part, the heavy selling may lead to a bounce, but those type of setups aren't going to be something we're going to look to play, because then we'll have maybe a nasty sell-off and then a 2 to 3 day sharp bounce. Nothing that we'll be able to play with a tight stop or really a setup that has any kind of edge for us. So with all these false breakouts, what that means for us is in the short term, it's best to maybe sit tight and don't do anything. If there are any charts out there that have held up well, maybe if the market does recover within the next day or two, we can take a shot on the long side with small size. But again, this isn't the time to load the boat on the long side. This isn't the time to make back the money we just lost after 3 or 4 days sell-off in the market. It's not the time to, you don't want a revenge trade, and this is certainly not the time to do that, as conditions could deteriorate further from here. So right now, it's best to do nothing, or at the very most, take a small size position if the market is able to recover from here. Which leads us to the bonus tip, and thanks for sticking around, is don't fall asleep on a false breakout. Now, we realize last Friday's meltdown was pretty powerful, but again, you don't want to change your routine. You don't want to just say, oh, the market broke down, the charts are going to look ugly, there's no point in me scanning. Go ahead and scan anyways. You just never know. You want to be on top of what's going on. You want to see that stock that shows relative strength, as you never know. And that allows you to have some kind of game plan developed before the open. You know where you want to, you know what stocks you want to go long, maybe what stocks you want to short or whatever. But you already have some kind of analysis in place, and you're not just reacting to the price action intraday. And that's where mistakes can be made. Do you want to stay ahead of the market shifts? The Wagner Daily Pro gives you professional grade analysis and actionable trade plans every day. Visit morpheustrading.com, click stock picks, and join the MTG Tribe now. That's a wrap for this video. If you found this analysis valuable, don't miss our previous video showing on your screen right now. Drop a comment below with your thoughts on these false breakouts. As always, stay disciplined, manage risk, and trade what you see, not what you think.